Alright, so before we get into the video, I need you guys to know that, or at least have an understanding of what moves the forex markets, why do they move, and what causes them to move. So prices move because of supply and demand. That's pretty much simple. That's pretty much it. When demand is greater than supply, prices rise. When supply is greater than demand, prices fall. Sometimes prices will move sideways as both supply and demand are in equilibrium. So for example, what you're seeing on your screen right now is an equilibrium, or what we call a range. So when price is not moving in an uptrend or in a downtrend, we call this a range. So it can kind of be risky to trade in a range, but I would prefer scalping. That's for another video. And yeah, let's just keep moving on. Let's go to the next topic. Alright, so what is support? In a downtrend, prices fall because there is an excess of supply over demand. The lower prices go, the more attractive prices become to those waiting on the sidelines to buy the shares. At some level, demand that would have been slowly increasing will rise to the level where it matches supply. At this point, prices will stop falling. This is called support. So what you're seeing on the screen right now, what I'm basically playing around with is the support level. Why? Because you can clearly see the price struggles to break through, and we can go through this a couple of times. So you can see the first time rejects, goes up, rejects, goes up, third time rejects, goes up, and from here you already know that this is a level where price is struggling to break through, right? So you can see the fourth time we actually do manage to break through, and it kind of fakes out people, it fakes out traders, comes straight back, retest, and goes up again, comes back, struggles to break through, and goes up again, right? So I want you guys to think of it as a floor. Yeah, I want to think of it as a floor. This could be really like essential to trade. You could make some money off of it, but as I said, you should never hold trades on a range. If you're trading through a range, I prefer scalps. If you don't know what a scalp is, it basically means a small trade or a quick trade, a trade that's anywhere between 5 minutes, between an hour. Those are the trades that I look for in a range. So yeah, let's go to the next topic. So what is resistance? So resistance is the opposite of support, the complete opposite. Prices move up because there is more demand than supply. As the prices move higher, there will be a point when selling will overwhelm the desire to buy. This happens for a variety of reasons. It could be that traders have determined the prices are too high or have met the target. Or it could be the fact that buyers are to initiate new positions at such rich valuations. There could be a number of reasons, but let's just say a technician will clearly see, on a price chart, a level at which supply begins to overwhelm demand. It's quite obvious. The more you are experienced in the market, you will sort of have that understanding. And this is called resistance. So just like support, it can be a level or a zone. So up here, you can see that there's a zone. This is my resistance. Same thing as support. You can see it try to, break through, rejected, break through, rejected, break through, rejected. So at this point, we had 3 attempts of breaking through, and it couldn't. This is clearly a zone, and we know now that this is a resistance. I would like to have you guys think of it as a ceiling. Let's say a ceiling. So a floor is a support, a ceiling is a resistance. That's the easiest way of thinking of it. So yeah, hopefully that made some sense. Again, if you guys have questions, do make sure to just comment it down below. Every question will be answered. Alright, so once an area or a zone of support or resistance has been identified, those price levels can serve as potential entry or an exit point, because as price reaches a point or previous support or resistance, it will do one of two things: bounce back away from the support or resistance level, or violate the price level and continue in its prior direction. So for example, we can see how many times this has attempted to break through the resistance or the ceiling in this case, and 5 times it couldn't break through, 6 times, and on the 7th time it finally broke through. So now what does this become? Your ceiling becomes your floor, or more advanced, your resistance becomes your support. So if you move over, we can see that was clearly the case. It came back, and now this resistance became our support. So you can see it bounced on the floor, came back up, and kind of a range consolidated between that, came back down, and then jumped up again. So hopefully that makes sense. It's the same with this. So you can see that it tried to break through the floor, or the support, the support, and you can see it did break through, it did become our resistance, and obviously that failed and faked out traders, which does happen. It does tend to happen quite a few times. You'll see in the markets, or the more you trade, it happens a lot, and you can see it became a support again, right? So again, hopefully that made some sense. So many experienced traders will pay attention to past support or resistance levels and place trades in anticipation of future similar action at these levels. And technical analysis is not an exact science, and sometimes the price will dip below support levels or reverse before it gets to the prior support level. The same is true for resistance. The price may reverse before it gets to the prior resistance level or break above it. In each case, flexibility is required in, sort of guessing these chart patterns. This is why support and resistance levels are sometimes referred to as zones. So you always wonder why people call it a zone or a key level. They're basically either calling it a resistance or a support level. There's nothing magical about these price levels. It is simply that many market participants are affecting or sort of acting off the same information and placing trades at similar levels. And this is what causes these sort of key levels. Most experienced traders can share stories about how the price of an asset tends to help when it gets to a certain level. For example, assume that, let's just say Jim was holding a position in stock from March to November, and that he was expecting the value of shares to increase. Let's imagine that, what is his name? Jim notices that the price fails to get over $39 several times over several months, even though it has gotten very close to moving above the level. In this case, traders would call the price level near $39, a level of resistance. Alright guys, so now we're going to get into the practical part of this video. So I'm going to show at least 3 examples in this video. It's pretty easy to find examples on the chart. So I just want a Euro GBP, and we're ready to find an example. So I'll give you guys about 5 seconds to find the support and the resistance. Alright, so the support we have is right here, and if you didn't get it, it's okay. You can try the second example or third example. With time, you'll start to understand the concept of these key levels. So as you can see, we had 4 touches here, and it could never break through. Of course, we did break through here, but it doesn't count because the body has to break through, showing that this area got validated. As you can see, it wicks up above, meaning that there's not enough pressure, or at least bearing pressure to break through the zone. So of course we all know what happened after that. We just jumped up, and and then the resistance we have is right here, right? Because as you can see, all the wicks we have and all the touches and all the reversals we have at the zone. So so with all these rejections right here, let me just take it back. With all these rejections right here, we should already know that this is a resistance. So for example, if we came here, you can see we wicked there, we rejected back, and we actually broke this with a wick. We actually broke the green candle. So I don't want to get into further detail, but for example, let's just say we took a trade here, we made it 13 pips, right? You would typically not want to go below the support level, because that's pretty obvious we are struggling to break through this level. So chances are it's going to come here to the zone and then just reverse again, which did clearly happen. So you don't want to go for 2 to 1, and I actually don't like taking trades that's less than a 2 to 1 trade. I like going for 3 to 1s, 3 to 1s or 2 to 1. Lowest, if I really want to take the trade, I see it's good, high probability, I'll go for 1.5. In a case like this, I would not take the trade though, but this is just an example. So in most cases, if I can't go 2 to 1, I'll not take the trade. So in this case, I'll probably not take this trade, but as you can see, most people will be aggressive and go for the trade. Here you can see we again do the zone, add this little red candle, and then we finally broke through with this candle. This could be a sign to enter the trade. Let's say we went for 8 pips, went for 2 to 1, we will beat this trade. Just an example, so you can see, right? Vice versa with the support version, it's the complete opposite. At this level, all we're looking for is buys. We're looking for the trade to go up, or the market at least to go up. So we had 1 rejection, 2 rejections, 3, and then 4. The third one, you're gonna take a buy, or on the fourth one, you're gonna take a buy. So for example, like this, you could take your buy, but I like to take a trade where it breaks the previous bearish candle. So the previous bearish candle, this one right here, you can see it's quite long. So the only way I'll take a trade is if it reverses. And I don't know why this the colors has changed. That is quite weird. Just give me a second. Alright. So yeah, this will be my stop below this low. Below the candle, and then you can see this is a 1.4 to 1, so it would not have worked out. 2 to 1 goes like this. Either way, it would have worked out, as you can see, but I wouldn't personally knock off this trade just because the level is going above, or the take profit is above this zone, which I don't like. Of course, again, in this case, it would work out, but yeah, I don't go for it. So yeah, hopefully that made some more sense. Let's get into the second example. Alright guys, so now we're in the second example, and we actually on USD. We're in the 5-minute time frame, and that's just to show you guys, or to prove to you guys, that you can find support and resistance on the low time frame. So I'll give you guys 5 seconds again to try and find the zones. Alright, so our support level, support zone, it's gonna be right here. Hopefully at this time the resistance will be right here. And I want you guys to actually just take a look at how many times these zones have been violated and got the reversal off of it. This over here is 1, 2, 3, 4, 5, 6, 7 times. On the 8th time, finally it broke through. On the support, 1, 2, 3, 4, 5, 6, 7. This just shows how strong these zones are, even if it's on a lower time frame. Of course, on a higher time frame, they're more significant, but this is really strong zones. So as you can see, 1, 2, and 3. By this zone, you should really, by this time, you should know, okay, this is a strong level. We get 4, 5. This time, you could have taken a trade. Yeah, you could have taken a trade as well. Yeah, you could have taken a trade. Yeah, you could have taken a trade as well, which we would have probably lost. But as I said, I don't recommend taking trades in a range like this. Normally, I'd wait for breakthrough and a retest, and then to go up again. That's just how I like to take my trades. But yeah, as you can see, just quickly, normal, like it's just. So yeah, like for example, if you just look here, yeah, you could have taken a trade. So you can see the bearish candle hits it. We get a doji candle. We get one bullish candle, and the third one, which does break the bearish candle. As I said, that's my entry. Stop loss would be just below the wick of the lowest candle, or the lowest point here, and then I would like to go for 2 to 1, but again, it violates the zone, which I don't like. In this case, it would have worked out. I'd have won the trade, but realistically, I would not be going for this trade. So just another example of support and resistance. You could have took multiple trades off of these if you want to scalp, maybe go for 1-to-1s and stuff, and it definitely would have worked out. So yeah, let's go to the next example. Okay, guys, so now we're on GBP/JPY, third example, final example for the video. And yeah, we're on the daily time frame, just to show you guys that you can also find these zones on the higher time frames, just like the lower time frames. So once again, I'll give you guys 5 seconds to find the zones. Alright, so our support will be right here. As you can see, all those rejections, and then our resistance will be right there. You can see 1, 2, 3, 4 rejections. By the third one, you should already have it locked in. The fourth one doesn't have to be there for you to like find out the zone, is what I'm trying to say. Because let's say this was the live chart, this would clearly be resistance. So yeah, if you can go through all of them, you can see we've got the rejection, and then the fourth time, if we go back to the zone, you should be able to take a trade. So for example, if this was the live chart, let's actually take it right here. Let's just say this was live, and this is what we saw, the green candle, and we're about to go, like we're about to touch the zone. That would be a perfect entry. because it shows that it touched and immediately rejected, and now we're here. So you could actually take an aggressive entry and, you know, enter a sell, or you can wait for the price to break through the bullish candle, which I like to do. So as you can see, yeah, that's where we break through. So that's what I would actually go for my trade. But then again, it wouldn't be able to go for a 2-to-1. I would have my stop loss about here and then go for 2-to-1. Again, in this case, it would have worked out, but realistically I would not be going for it, because again, I do not like my take profits being above certain zones. I would like to have it in the range, and no, that's just not going to work out. It's a 0.8 risk reward ratio, so definitely not going to work out. But these are just short examples of how support and resistance works, where it works, how you can find it. You can find it on any chart. You could find it like let's just, I'm gonna show you guys actually real quick. I'm literally just gonna find any chart. Let's just do, yeah, let's just do this one right here, and let's go on the hourly. Let's just say the 1 hourly. I do got some stuff already there. Let's just delete that, and let's just stop right here. Okay, so I just stopped anywhere, and you can literally find zones like this. You know, that's a zone, clearly a zone. We'll say like this is the resistance right there, and yeah, so we rejected once, twice, we broke through, faked out traders, rejected again, rejected again, rejected again, rejected again, and literally look, rejected again, and comes up here, fakes out traders, rejected again. These are, it's so easy to find these sort of levels and trade off of these levels. As you can see, the market is top because it's a Saturday. But if you continue and let's say we get here on Monday, you could easily look for a buy. You know, you could easily look for a buy. Let's say, for example, it does something like this. It touches the zone, rejects it with the doji candle, and we get this beautiful candle. You would put like a buy stop right here to enter. Stop level 20 pips right there below the zone, and go for a 2-to-1. See, so in a case like this, I would really like this trade because the other zone is right here. It's way far, but you can even go for 3-to-1 if you want, or 4-to-1, or 5-to-1. As you can see, that worked out perfectly. But yeah, I'll normally go for 3-to-1s and stuff. So this is sort of the perfect trade you want to look for when you're trading support and resistance. Of course, you can go for 2-to-1s, whatever you like, whatever you're comfortable with. And yeah, this is all you need to be profitable. Actually, you just gotta obviously be disciplined and know what you're doing. But the strategy is 10%, the psychology is 90% of making money. Alright, so this sort of brings me to the end of this video. There's nothing more to really talk about. If you guys want maybe more examples, or you want another video on support and resistance, how you can make money from it, if you guys want a live examples of me trading support and resistance, let me know. Let me know anything in the comments. All the comments will be answered. Make sure to like and subscribe, as it, you know, motivates us to keep going. And I guess I'll catch you guys in the next video. Peace out.